Today I'm going to share some important updates on the current state of the mortgage industry. Whether you're considering buying a home, refinancing your mortgage, or simply staying informed, these changes could have an impact on your decisions in the coming months. Let's start by talking about what's happening with interest rates. Lately, we've seen some positive movement in the bond market, which has led to improvements in mortgage rates. However, it's important to note that not all rates are improving equally. For example, higher rates like 7.125% haven't rallied as quickly as lower rates such as 6.125%. This happens because investors believe loans with lower rates are more likely to last longer. In other words, if someone takes out a loan at 7.125%, the expectation is that they will refinance sooner when rates drop, which makes the loan less valuable in the long term. On the other hand, a loan at 6.125% is seen as more stable and long-lasting, so investors are willing to pay more for it. As a result, we're seeing bigger price improvements on lower rate loans. So if you're looking at mortgage rates and wondering why changes aren't consistent across the board, this is why. Loans in different rate ranges behave differently in the bond market, and that impacts the rates you see on mortgage offers. Next, let's talk about what's happening on the regulatory front, particularly with the Consumer Financial Protection Bureau, or CFPB. The CFPB was established after the financial crisis of 2008 to 2009 to protect consumers, especially when it comes to financial products like mortgages. Over the years, the Bureau has created several rules that have shaped how the mortgage industry operates. However, there's currently a push to reform some of these regulations. One of the biggest topics is loan officer compensation. Right now, loan officers are generally paid based on a set commission structure, which can sometimes limit flexibility in certain situations. For example, if there's a mistake on a loan that requires last-minute credit to keep the deal moving, there's not much room for loan officers to adjust their compensation. The industry is advocating for more flexibility in situations like this, which could ultimately benefit consumers by helping deals close more smoothly. Another key area of reform is around RESPA Section 8. This section of the Real Estate Settlement Procedures Act governs how revenue is shared between different parties in the industry, like mortgage companies, title companies, and real estate agents. The current rules are very strict about how money can be exchanged between these parties, and the industry is pushing for clearer guidelines and more freedom to collaborate. This could potentially lead to better partnerships and more streamlined services for the consumer. There's also been a lot of discussion about UDAAP, unfair, deceptive, or abusive acts and practices. The problem with UDAAP as it stands today is that it's somewhat subjective. What one person considers unfair might be seen as acceptable business practice by another. The industry is advocating for more objective standards to define what counts as unfair or abusive. This change would make it easier for both consumers and businesses to navigate the rules without confusion or fear of unintended violations. Finally, it's important to understand that these regulatory changes take time. Even though there's a push for reform, the rulemaking process is slow and involves multiple steps, including proposal reviews and comment periods. It could take a year or more before any significant changes are fully implemented. In summary, the mortgage industry is seeing some positive changes, both in terms of interest rates and potential regulatory reforms. These changes are designed to provide more flexibility for consumers and businesses alike, but they're also complex and will take time to roll out. If you're thinking about buying a home, refinancing your loan, or just want to stay up to date on how these changes might impact you, feel free to reach out. I'm happy to walk you through the details and help you make the best decision for your situation. Thanks again for your time, and I look forward to working with you.